Good evening. This is Lewis Moore, and I am hosting the Oklahoma Insurance Watch. And I am a former state representative, and for 12 years of House District 96, the insurance committee chairman for the state of Oklahoma. And I've been in the insurance business for 30 plus years, 35 years or so. And I also work for a home and auto insurance agency in the beautiful city of Edmond, Oklahoma. And also I do work as an appraiser and claims umpire with my friend who's online tonight with us, Virgil Stillwell of the Malstromic or Maelstrom IC.
That's right. It's Maelstrom Insurance Consulting.
Maelstrom Insurance Consulting. Very good. And he does insurance consulting for insurance policyholders who are having a difficult time with a carrier, and also construction contractors. And he and I have worked together as appraisers and claims umpires, and it's really a lot of fun to help people in a time of chaos and concern and help them. Tonight, I want to start with looking at health insurance, since most people may or may not have health insurance that they've got to renew through their employer or for themselves for the next year. And I wanted to talk a little bit about that. The ACA, the Affordable Care Act subsidies, we've heard a lot about that recently on the news, may be going away and greatly affecting some of the coverage's affordability. The ACA money has been going directly to the health insurance companies. So those companies are taking the money directly from the federal government through appropriations, and they tell Congress what they need, how much they need, and how much they want to be able to continue to provide those policies for individuals who contact them and find out whether or not they qualify for the subsidy and how much. And then they typically get that, and they get it for a fairly long time, months and years. Okay. So now it's coming to a point where we're not as able to afford those as we were, because the premiums have gone up multiple times. And Congress has been giving them what increases they've wanted, but now we don't have the money to give that to them. And really, every year we should be checking those things out to see where we're standing and how we can make those things more efficient. So one of the things that is a really good way is to just give the premium money, the dollars, to the people who need the coverage, and let them use their buying power by negotiating themselves with the carriers, and then deciding amongst themselves what coverage meets their needs and at what cost, and deciding if they or their family can handle that. So it works out pretty good that way. If you minimally, no matter who you have coverage through, if you will ask what the I'm sorry, Virgil. Okay. So if you will just start doing this, start asking your provider or the provider of care. So if you're getting an MRI, you're getting a CT scan, you're getting blood work done, lab work, ask them what the cash price is. Is there a less expensive way of getting the service? And let them tell you. And then if you're given the money, like the president's wanting to do, then you could pay in cash for the benefit, and and then you got it for less. So my physician, I asked him, how much is a office visit? He said, if it's insurance, $150. If it's cash pay, it's $75. So I just would pay $75. And there were certain procedures that I was getting done. It was $700, but if I paid cash, it was $350. So there is a way that we can save money, get the same benefit, and really help the provider because they're getting their money sooner than the up to 90 days that it takes for a provider to get paid through the administrative process and filing paperwork and having to have employees to do the paperwork for them and file it and follow up and that kind of thing. So if we just do a quick and easy transaction, cash pay, debit card, something like that, where they get their money right away, that serves everybody well. So by doing what we're talking about, by giving the employees cash instead of giving the insurance companies the money directly, that drives the prices down dramatically and quickly. State insurance commissioners should have been pressing for this over the last 8 or 9 years that we've been dealing with the ACA. They could have come up with that on a statewide basis, a way to handle it that was efficient and everything. And that was one of the things that we had considered doing as a state rep, but we could not get the insurance commissioner to do it. And they meet in multiple meetings together nationally, and nobody came up with that reason. That's not very good. Rates are going to increase just with the health insurance or the health medical inflation, as it were. New drugs, new ways of treating people, and that kind of thing. There's always going to be a new cost. And my friend's work plan initially was 48% more, and their employer negotiated a 17% increase down from 48%, 31%. They went over how their policy was used by their employees. They checked everything out, kind of went line by line. They found that 90% of their employees didn't meet the deductible. So they increased the deductible amount and increase their FSA or flexible spending account contribution. The flexible spending account limit this year is $3,400 with a carryover of up to $680. That means if you don't spend the $3,400 in the calendar year of 2026, you can carry over 680 along with the new limit if you have expenses that you need to cover. And are you familiar with that, Virgil? The, so the individual.
Am I
I'm sorry.
familiar with
On the
what
health
again?
insurance. On the health insurance
No,
side.
I wasn't. As public adjusters, we never deal with health insurance at all. And I've never had health insurance besides, I think a few times at work, but I've never really used it.
Wow. Well, there are people like Virgil out there. A lot of people do use it, and when they do use it, well, on the FSA, I'll just go back to that real quick. The married limit is $7,500, and but 70% rate increase was ultimately offset by the changes in the plan. So it worked out really well, and this was a fairly large company with people all over the country. And so one of the things is for the employers and the employees is to take your time in making a good decision about the insurance offerings. Try to read through everything. My friend's offerings went over 38 pages in length. That is a lot to ask somebody, but they're paying for most of it, and they just want their employees to benefit from the money that they're spending on their health care, which is also vision and dental and life insurance and voluntary life and retirement plans and all that good stuff. and we want them to make sure that they make the most out of the expense. That's part of the compensation package. So what do you need as an individual? Are you younger, like 18 to 30? Most people who are 18 to 30, if we go back in time, you were Superman and you could not get hurt. So if you can't get hurt and you don't get sick because you're invincible, what are your health needs? Well, some people, especially as you get older, you're going to have medications, and there may be a chronic illness that pops up. And are you single or married, and married with kids? And do you have any family concerns uh, within the larger family, like cancer, heart issues, other issues, diabetes, and that kind of thing? If you do, you're going to be more concerned about your health insurance coverage. And so, um, the one thing that I would encourage everybody to do is get a primary care checkup and make it an annual checkup before opting for coverage for the next year. Get that done so you can see if there's anything in particular that you need to be able to plan for. Get a biomedical screening, which involves complete blood work and lab work and screenings, and that means like mammograms and PSA, and that's part of the blood test is for the PSA, which indicates whether or not you have cancer. Um, and then meet with your PSP after you get the results, which don't take very long, a week at the most, and x-rays if you have to do x-rays or CT scans and that kind of thing. And then use that information to best come up with a plan for your issues that you might have. And if you do have something or a family member has a chronic illness, a quality HMO plan can put a plan of action together for you. And they're really good at helping with intensive care. Okay. Otherwise, you can do a PPO plan, preferred provider organization plan. But either way, with a health management organization plan, HMO plan, or the PPO plan, make sure that your physicians that you use are in the plan. If they're in the plan that you're thinking of getting because of the cost or because of the availability, um, make sure that provider or providers and clinics and hospitals that you want to use are in there. If they are, that's great. That's should be at the top of the list to choose for the year, because when you make a decision on health insurance and your employee benefits, you're making a choice that you typically cannot change for the 12 months, for the next 12 months. So that's great. All right. Um, and then prepare to make individual healthcare options and send back to the HR, Human Resources Department, your choices by the deadline, if not sooner. The sooner the better. Okay, so those are going to be coming up because tomorrow is December 1st. So very quickly, those deadlines for getting that paperwork in is going to be hitting. So get help, have them help you. You can contact us, but the best thing to do is to talk to folks and start scratching out what you want to do, and then ask your HR so that you get the best information possible and get it done. Okay, one cost savings option is a share program. That is like a Christian share program, and like zionhealthshare.org or metashare.com or libertysharehealthshare.org. That's they cost less, and they're easy to use, and a deductible for like a pregnancy. And if that pregnancy that while you're pregnant, you're going over the beyond the calendar year, that you keep the same deductible going for however long it takes you to meet and resolve the health issue. And So it's a really neat thing, and it does cost up to a third to 40% less to do that. It's a really good option. Share plans were the okay. Then bind your your primary care physician, OBGYN, cardiologist, favorite clinics, and like I said before, make sure that you have a primary care physician, especially on some of those plans, like an HMO plan. You definitely want to have somebody that you already know, already have met with, and have them be your primary care physician. Okay. Then some there's facilities that are scattered all over the metro, right? So, or the communities that you perhaps live in. They are typically associated with larger healthcare systems. So you want to be able to connect the dots with and try to stay within that healthcare system if it is at all possible for ease in meeting deductibles and co-insurance and that kind of thing. Now, if your health plan and you definitely want to stay in the network if at all possible. If it's an emergency, it doesn't really matter. If it's a life or limb emergency, you can go anywhere to save yourself and your limbs, and that will be considered to be or treated as if you were in network. Okay, so if your plan offers a select or bundled option, and one of those is Health Choice, which is the health plan for about 200,000 Oklahomans that are affiliated with state government or different associations and that kind of thing. So if you are a select member, you always ask the person that you're getting help from or care from, are you a select member? And if they say yes, follow up with them on and be armed with the CPT code, okay? And the CPT code stands for Current Procedural Terminology, and that is just a way of communicating amongst providers and the healthcare systems as to the exact treatment that is taking place. So if you have a problem, it's going to be affiliated with a certain CPT score. So you ask the provider, hey, are you a select physician for these CPT codes? And write them down, have them ready, and they will say yes or no, and they will give you a written piece of paper with um, what is covered and how much it's going to cost you before you do that procedure, which is really handy. And if you are select or do bundled health care, and several health insurance carriers do that, okay? And so if you can find it being bundled, that means you're not going to have to pay a copay, a deductible, or co-insurance. That means that you're going to go in and get that procedure done and be able to leave without having to get your wallet out or your purse out. You won't owe them anything. And those things will go towards your deductible. Okay. So that's a really neat deal. I had some health issues over the past couple of years and I had 82 health claims. Okay. So I made sure I knew what the CPT code was, and I would ask the provider, hey, do you cover this um, as a select procedure or issue? And they said, yes. I said, perfect. When can I come see you? Because they're getting paid when it's a bundled item or a select item. And some other carriers may call those different things, right? But just refer to them as a bundled item and they'll know. So when you tell them that, they're going to get paid early They're going to not have to wait 90 days. They're going to get paid the same day. And in some cases where it's a surgery, they can get paid before the surgery is done, and they'll get a 20% discount, knowing that they're going to get their money ahead of time. There's some neat ways to get great coverage and great care and not be saddled with debt. So that's a really neat thing. All right. So the dental plan, there's a couple things that come along with your care, and one's a dental plan and a vision plan, and make sure you use those because usually they come to you, especially if you're an individual and you're single, you're going to get that care and it's not going to cost very much, if anything at all. Make sure with dental you do the annual exam, get your checkup, and they'll do x-rays on you, make sure everything's good. And a teeth and 2 teeth cleanings a year, that's a really valuable thing. And most of the dentists are going to be in the network, so you won't necessarily have to change anybody, but you want to make sure you know the dentist and where they're located, and then go. Make sure you go. And then on the vision, the same thing. Your vision is invaluable. You can't do good work if you can't see, right? And kids with good vision make better students. They can read. A lot of times, when kids have problems reading, it's because they can't see very well. Okay. And then go to an optometrist that's in network or an ophthalmologist that's in network and get an exam. Okay. Then on the home and auto, there's a lot of people have a home. If you don't have a home and you're renting, you can get renter's insurance. And a lot of people have automobiles, and it's amazing how many people have more than one. And I've run across somebody who had like 20 and several that had 8. Well, they still want them to be covered, but I know if they don't drive them very much, they just want to have liability only. So liability only means they don't have comprehensive and collision because um, they're not driving them. And so we'll just put in bodily injury on them and property damage in the event that something happens to them, that their liability part will be taken care of. But comp and collisions are a more expensive issue. And if they're just storing them in their garage or their warehouse or their barn or something like that, there's not a need to have that coverage. Okay, so there's a lot of chaos in the market. There's a lot of insurance company ads. It's crazy how much money is spent to get people to buy health automobile insurance by some of these carriers. So what we want to do is look for ways to protect your property, use your money wisely, and trust in the claims process. And that has to do with any kind of insurance. Okay, we have to have an element of trust. We need to be on the same page with the insurance company as to what's going to happen when a covered situation happens. Fire happens, how is my property going to be taken care of? The replacement of that property, how is that going to happen? If I'm in an accident, what's going to happen? Who do I call? How fast can I get something taken care of? Am I going to have a replacement vehicle, a towing, that kind of thing? What's going to happen? And so it's good to go through those things at least once a year, review your coverage. Okay. And what's interesting is we live in the second most affected state for wind, hail, tornado items that happen. Wind and hail and tornadoes. So what we call extreme weather. We're the number 2 state for those type of claims. Texas is number 1. South Dakota, Nebraska, Kansas, all in there as well. All the states areas south of I-10, which runs east-west, that's like Florida, Alabama, Georgia, Mississippi, and that kind of thing, Louisiana. They kind of have the same issue, except they have a threat, more of a threat of hurricanes as well. So what happens? The roof is the main item for your house. Okay, it's exposed to UV rays, heat, the sun, hail, wind. Did I catch you, Virgil? Okay. um, so roofs have been a large claim item on the house, and it's the largest aspect of your house, exposed to everything. Okay, except from the inside, and even from the inside, the heat buildup in your attic can bake your roof from the inside and cause blistering or weakening of the adhesive and uh, characteristics of the roof and everything, and that combined with the UV rays and everything from the outside make it much more susceptible to fracturing and breaking up and denting by hail that at some point or another is going to happen. So roofs can typically last 15 to 20 years, a quality asphalt shingle. But no asphalt shingle can survive 2.5 inch hail without severe damage. A class 4 roof can survive about a 2-inch hail, and a class 3 roof 1.5 inch hail. Well, a 1.5 inch hail is about like a little bit bigger than a quarter, like a $50 size or less. And that's when they come down with an accompanying strong wind, it doesn't take very much before that has to be replaced. Okay, and so the fact that they're getting replaced and they cost typically around $8,000 to $14,000 a pop for a 2,000 square foot roof, that is a big hit for the insurance companies. And depending on whether or not you have replacement cost and what your wind and hail deductible is, you can take a beating on that thing as well. No pun intended. But so knowing what quality of roof you have is a great place to start. If you have a class 3 or 4 roof, you can get up to 35% in discounts from insurance carriers. Each carrier treats your roof a little bit differently, and some of them have begun to underwrite the roof separately from the house. And so if your roof is 10 years old, as soon as it's 10 years old, they are beginning to, under newer contracts, and haven't been grandfathered in with an older contract and kept that. But if you have a new contract at the 10-year mark, they're going to treat any claims that have happened to that roof as an ACV, or actual cash value. What does that mean? That means if your roof is 15 years old, they're going to start on the 10th year applying a percentage depreciation to your roof. And typically the first year it's going to be 4%. And each year thereafter, 1 or 2% per year. So if you have a roof that's used, you had a brand new roof, and now it's 10, now it's 15 years old, you have 4% plus 2% for the next 4 years. That's 8%, that's 12% depreciation, or 12% deductible on your roof for a replacement claim where you're having to replace the roof. And so that's an actual cash value treatment of your roof that you thought was a replacement cost roof, meaning that you're going to get that roof replaced with the quality that you had on there. And you can still do that with an actual cash value roof, but now you're going to have to pay 12% on as a deductible. So every $100,000 in the dwelling value. So let's say you have a $200,000 house and you have 12% the depreciation on 200,000, that's $24,000. So $24,000 will cover up to a really good class 4 roof, and in some respects a metal roof, but you're going to be out the 24,000. Okay, so that's something it's good to know before you go into storm season. Okay, find out from your carrier what kind of roof you have, and if you don't know, and like you haven't kept the invoice from the first time you got that roof, the current roof, or you don't have a brochure saying what the shingles were, like a Legacy or a teak wood or Timberline or something like that. If you have that, it's a lot easier to show your insurance person that's writing the coverage that can get you the discount. Okay, on that. That's how you do that. And if you need help in ascertaining what quality of shingle you have, Virgil Stillwell would be very valuable in finding. He'll help you find somebody to check the quality of the shingle that you have. Okay, and be able to kind of gives you an idea of what to expect and how you can handle your claim. Okay. If you decide to go with a metal roof and you live where you can do one, they're rated as a class 4 for insurance discount purposes, and as a UL or underwriting laboratory, UL 2218 is the nomenclature for that type of roof. And also for insurance discounts, because you're going to get the same kind of discount up to 35% in some carriers as a class 4 shingle. And 24 gauge, which is a thicker gauge metal roof, and ribbed, which means it's pressed together for superior hail and severe hailstorms. And those things can last 40 to 70 years. Okay. And they can also survive 140 to 165 or 160 mile per hour wind. Okay, that's an EF1 through an EF3. Okay. Oklahoma, again, is the number 2 state for wind and hail claims. And how can we mitigate that? We can put on the best quality of roof that we can afford to put on. And you also get the discount, so that kind of offsets over a number of years the cost of that by getting a lesser premium insurance bill. Okay. So knowing ahead of time that you make sure that you know, communicate with your insurance representative and find out what your wind and hail deductible is. Okay. A lot of them start off at 1%. Well, 1%, that's $1,000 on a $100,000 house. If you have a $500,000 house, that's $5,000. Okay. And then there's also an all other perils deductible, and that's for broken glass. Let's say the hail comes sideways and breaks your glass, and water gets in the house and that kind of thing. you can go down to as low as around $1,000 deductible for that, but you're always at this point, it looks like wind and hail deductibles are the industry standard. The highest one I've seen that they'll put on a home is 5%. So 5% on a $100,000 house is 5,000. 10,000 on $200,000 house, 15,000 on $300,000 house, and so forth. So we're going to have an emergency fund just for the home. And a friend of mine, Chris Sneed, who's a state representative out of Muskogee, is working on legislation right now to provide kind of a homeowner health savings account so that you can save up money in this account that earns interest and everything, and that you can use for other things if in the end you don't need that for a large claim for your home, but you have it ready to go in the event that you have a big hailstorm or tornado and you've got a big deductible that you got to take care of, and that money will be there. So Representative Chris Sneed is working on that, and if you have any ideas, give him a shout. Okay. Now, going back real quick to your employee benefits, you're also going to have life insurance, and you should have a employer sponsored plan, and typically with their health insurance, it comes in at 50,000. So you want to make sure that you sign up for that. They may have a voluntary plan, and they typically will have a guaranteed issue amount, and I would take that. And then if you're married, and you guys are both squared away and have common, everything's going along well and everything, I tell men when I do their life insurance to make sure that their spouse, and so it works both ways. If you're working with somebody who's a female, then the husband is going to be the owner of the policy. And if you're a male, make your spouse the owner of the policy. And that way they get paid. And I do that with my wife, and she gets the bills, so she makes sure that it stays in force and gets paid and that kind of thing. And then there's no problems if the unlikely event happens where you pass away. They get the money, and there's no issues, no problems. I've run into some cases where somebody was separated and they didn't continue the coverage. And in some cases, they even named somebody else as the beneficiary, and they left their spouse with kids and no life insurance, and that wasn't very good. So there's a number of things that are interesting that can happen, unfortunately, and but find somebody that can help on the insurance side, consulting and counseling, and I'm happy to do that for you. Virgil is awesome when it comes to your house, especially. There are other things as well, but in working with him in home claims, you will not have or find a better advocate for yourself and your family when it comes time to a claim than working with him. I appreciate you very much, and thank you for watching our episode of the Insurance Watch, Oklahoma Insurance Watch. And if you have any questions or concerns, please give us a shout, and we'll address those by phone with you, email, text, or in the next episode. We appreciate you very much. Thank you.